For watching. I'm Pat LaChapelle. Today is March 28th, 2026, and I'm working on developing a stock market model in Python. Before I get to work, I'm going to review the goals for this project, the progress I've made up to this point, and what I'm going to be working on today. Why is this blurry? My camera's blurry for some reason. That's better. So before I get to work, I'm going to review the goals for the project, what I've done so far, and what I'm going to be doing today. I work on this project every day, so if you're interested in stock market models, Python, AI coding tools, or just markets in general, please like and subscribe to follow along on this journey. So I have two main goals for my project. I'm putting everything into this PowerPoint here so that I can remember the analysis that I've done. So these are the two goals. First goal, beat the S&P 500 by a significant margin and make money in all regimes. So if the market's going up, I want to be doing way better than the S&P 500. If the market's going down, I don't want to be beating the S&P but losing money. I want to still be making money no matter what. My second goal is to create a usable Python tool so anyone can create advanced models for themselves. I'm writing all of this code in Python, so as I'm going, I'm generalizing it. And right now, you're able to implement a model, basically do everything that's going on down here in under 50 lines of code. So if you're interested in that, check out the GitHub link in the description. This is the GitHub right here, and I update it every day as I make progress. So yeah, please follow along there. Also, if you find it useful, please star the GitHub, watch the GitHub, and follow me on GitHub. All those things help me a lot. It helps me get coding freelance gigs and coding jobs. So this is kind of the general outline for the model. First, I have data, but you don't want to train the model on all data. You want to drop out things that are going to make the model perform worse. And basically, you want to find a good set of stocks to use. So I'm doing that in the stock universe class. Then once I have a good stock universe, I'm using that to train a model. And then the model should be predicting something like return for the day, return for the next 5 days, probability of going up, return relative to the market, things like that, return relative to the sector. And then once there's a really good model going, I'm going to implement that into a portfolio model, which then will allocate money in a portfolio based on the output of the returns model. So I started this at the beginning of the year. This is where I was at in January. I found a really good data source. If you're interested in that, you could find the link in the description. I also give instructions for how to get it onto your computer in the GitHub repository. Next thing, I basically did some very basic analysis. This is kind of cool to look at, but you can't use it to automate anything. So after I did this, the next step was build a light gradient boosting method. This is basically a very common tool for quantitative models for the stock market. And this is because it handles time series data really well. It handles big data sets really well. It handles a lot of features really well. And it handles missing values quite well. So the best I was able to achieve was about 51.5% directional accuracy. I did find some portfolio strategies which work, but if you look at this plot here, the only one that was giving a sharp above 1 was if I'm picking one stock per day. And you kind of need a sharp above 1. This is the minimum threshold for a useful model that you can implement. I looked at kind of thresholding it in different ways. So here, this is a little bit different from this model here. This is predicting probability of going up, and I found that if I put the threshold at 53 or 54%, it was working a lot better. But then if I increase the threshold to 55%, it wasn't making any picks. So that kind of indicates the model's a little bit fragile. And also, since you're picking one stock per day, that's a fragile model because basically all your money is invested in one stock. And if your model's wrong on that day, you have a huge risk of a major drawdown. So the next thing I needed to do, really, you can only do so well with a portfolio strategy if your model isn't that great. So the next thing I had to do was I wanted to go through all sorts of different features and targets, basically every single one I could possibly want, and try to train the model on that. So before I did that, I had to reorganize the code base because it was kind of a mess. And in order to make it usable for other people, like I said, I want just a flexible, diverse tool that can implement anything you could possibly want. So I reorganized the code base. This took all of February. This is where I was at the end of January. I implemented all of these features and targets. And once I cleaned up the code base, I was ready to start exploring different models. The first thing was just add every single feature to the model and see how it does. This is with 5-day future returns, so it's actually slightly outperforming the previous model. It's almost a 53% directional accuracy. If I added all features and oh, where is it? If I just added all features to predict the log returns for the day, it was actually performing worse. So I tried all sorts of different things, and I found this model here, which was working really well. And instead of looking at the directional accuracy of the model, I looked at some other metrics, which you can see here. So ignore the first two in the screen output, terminal output. But I'm looking at the information coefficient. This is giving the predictive power of the model. And then I'm also looking at the standard deviation of the information coefficient to information ratio, both on a daily and annual basis, and the t statistic. And so these last four variables are giving the stability of the model, while the information coefficient's giving the predictive power. So you want both. You don't want something that has really high predictive power but is seriously wrong when it's wrong. You'll have giant drawdowns that are going to be hard to stomach. On the flip side, you don't want something that's super stable but doesn't have a lot of predictive power. So I went through trying to improve this model. I tried different, basically this is looking at the correlation of features over time, and I tried removing ones that were highly correlated. None of this improved the model. Sorry. Yeah, so I basically did every single test I could think to do on this model, and after doing all the tests and updating the code, it was actually performing even better. This is where I was 2 weeks ago. So I was really confident in this model. I thought this is great. I'll have something that I can implement. Basically, once I have a really successful model going, next step is build a portfolio strategy for the model. And then the next step is to start paper trading it for a month. So paper trading is when you're not using real money. You're just making the picks that the model would be making, and you're seeing how your performance is over time. And I should be meeting my goals of beating the S&P, but the S&P is going down right now, so I should be making money in the market. And so I thought this was really good, but then when I changed the training test split, the data split basically, you use the first chunk of data to train your data. The next chunk is used to validate your data, so that's tuning hyperparameters for the model. And the final chunk is testing the data. And so when I did this here, I changed it from training on the first 60%, validating, tuning the hyperparameters on the next 20%, and testing on the final 20%. That's where I got these really good results that I was very confident in. But when I changed this to only train on the first 50%, validate on the next 15%, and test on the final 35%, the performance really fell off. And so there's a few reasons for this. One, obviously, I'm using less training data, so the model's not going to be as good. I'm also using less validation data, so the hyperparameters aren't going to be as good. And I'm using way more test data. So testing on 35% of the model, that's basically 5 years because I have data going back to 2011. That's training on 2011 to 2017 or 18 or so, and then testing on 2021 to 2025. That's just going to be hard to do because the market changes over time. So it could be several things to figure out what's exactly was going on. I did a walk forward analysis. So I grouped the data into groups of 6 years. The first 4 years of the group I used as training data. The 5th year was validation data, and the final year was testing. And so these are the results of the testing when I did the walk forward analysis. And you see the performance for kind of everything is really good, 2016 through 2020. And after that, it kind of falls off. And it's really falling off after 2021. So my goal is to get a information coefficient of 0.01 to 0.02, and I'm getting that every year until 22 when it falls off below 0.01. It recovers to be above 0.01, but it's still below 0.02. In 23 and 25 and 24 it was below again. And so the question is, why is this happening? One interesting thing is if you look at the information coefficient to information ratio, you can see that we see a similar trend. It's really good, and then it falls off after 2021. However, it never falls off so much that the model becomes unusable. I'm still hitting my goal metric of 0.3 each year for the annual information ratio. And so the question is, or basically my problem right now is that I have good stability for the model. It's degraded over time, but the stability is good, still good enough to use. However, the predictive power of the model is not as good as it should be. And then this is looking at the forward Sharpe ratio. So what is the Sharpe ratio over the test region? And one interesting thing here that one of the viewers pointed out, Sir Night Night, was that in 2024, despite being the worst performance for the model in predictive power, I still had a really high Sharpe ratio. So if I look into that, as he suggested, I could basically kind of understand what's going on in my model. That's making, why are the returns so good? You know, the best return since 2020, but the worst predictive power out of all years. That's kind of an interesting problem. So the first thing I did was incorporate sector information. That's what I've really been working on the last week. I finished this analysis yesterday. And the idea is if I add the sectors into the model, I'll get a new feature which is uncorrelated to the other features, and that should improve performance. However, when I looked at that, it didn't improve performance. You can see here the model performed worse when I passed those as a feature to the model. So first I was getting too many sectors. I was getting these really fine-grained specific sectors. You see it's things like this. So laboratory analytical instruments, services, educational services. These are really specific. These are from the SIC codes from the Edgar database, the SEC Edgar database, which I used to get the sectors. Yeah, so there's about 770 different SIC codes. So that gave me 770 different microsectors, and I have 13,000 tickers in the whole data set. And so I thought this is just way too many sectors. It's not going to really be able to pull information out of that. So I tried to improve it by using macro sectors. Each SIC code is associated with a large scale sector. And this didn't improve the performance either. I also tried the other way that this could improve the performance of the model is normalizing the features and target to sectors instead of normalizing them to the market as a whole. But this made the model perform worse too. And the reason for this is that basically when you're normalizing to the market, you have the information. If a sector is really outperforming the whole market, then you have that information in your model. But if you're normalizing to the sector, you might get stocks that are doing really well for the sector, but you don't know how it's doing for the whole model. Basically, the conclusion from this is that adding sectors made the model perform worse, not better. So there's some more things I could do on the sectors. Basically, the SIC sectors are really outdated. This is from like 1930. So I could improve this and use more modern sectors. There's the NAICS, North American Industrial Classification System. And that is updated, currently. So they have, these sectors are not very advanced. It's things like mining, but energy companies are included into the mining sector. But, those are very different companies. So the NAICS system has a lot more advanced classifications and filters out things. Energy is different from like materials mining. And so I have these improvements to go through. These are the things I'm going to try to do today, and I'm going to see if this improves the model. So, yeah, if you're interested, subscribe. Hey, everybody. Hey, Faster Than AI Tiger. How do you train the model? It's a LightGBM. So basically you have to... there's a Python package for LightGBM. It makes it really easy to do. But basically you need to give it you need to isolate some test data from your data set. You need to isolate some validation data from your data set. That's if you want to tune the hyperparameters, which is a best practice. You don't need validation data if you're just going to use some already known hyperparameters. but I'm using validation data so that every time I train the model, I'm getting good hyperparameters for the model. No, it's not a. It's I don't have a cat. I have a dog, and my dog hates cats. Um, so I never liked cats until I met a cat that I liked, but I can't get any cats anymore because my dog will kill it. Or maybe the cat will kill the dog, but they'll have a death battle either way. So I can't get a cat. But I do have a small dog, Buddy. Anyway, hey, thanks for joining. Um, and so, yeah, these are the things I'm going to have to try to do to improve the model. So, oh, yeah, how does the model train? So you split up training data to train the model. Basically, you give it a target that it tries to optimize. So I'm using the mean absolute error between the actual return and the predicted return. Um, And so the model goes through and it has an algorithm to basically, hey, Sir Night Night, improve results and make it, closer and closer to the, getting the right data. And then you have weights and stuff in the model that are changing over time, and that changes the output. So whenever you get the output that's the closest to what you're going for, then you have a good model, or the model finishes training. Hopefully, it's good. Validation data is used to tune hyperparameters for the model. So, like this is a tree-based model, so it controls things like how the tree's splitting, what loss algorithm it's using, things like that. And so you use the validation data to tune those and get really good values, the best values for your validation data set, and then you go through and train the model. And then you use the test data for seeing how does the model actually perform. If I trained it here and then I'm testing on the future, if I trained it in the past and then tested on the future, how does it perform? Um, and so now I'm going through these things to try to improve the model. So let me look at these, figure out what I want to do first. So add 2 to 3 market level context features. I have to look more into that to see, how is that going to be an issue? Because when I tried adding market level features before, it broke the model because I'm predicting things relative to the market. And so since this is going to be the same for every sector, that's not going to make it better. Um, I also, okay, volume price divergence feature. I need to look more into that. Add an explicit cross horizon momentum change feature. Momentum 20 minus momentum 200. So that's basically there's some more features I can add to the model. I also have to go through and trim features from the model. So I'm using different time periods of looking back. I have some short-term features, medium-term features, and long-term features. When I did the correlation analysis before, I was just passing it all features for one, I think maybe the last 20 days. And I was trying to drop out things that are correlated. But the fact of the matter is that some features, like if you're using momentum over 20 days, there's a good chance that's correlated to momentum over 30 days, momentum over 60 days, momentum over 200 days. So I have to go through that and figure out, what features do I need to drop from my model. Um, yeah, so that's one thing to do. Oh, I need to improve the universe. So I have a lot of things in my universe that actually the model shouldn't be training on. So if I improve it to train on good things, basically all of these here are all things that either aren't going to have fundamental data or they move differently than a normal stock. And so these are going to hurt the model prediction. Um, Adding new features. Oh, yeah, so I want to add fundamental features. I installed this yesterday so that I can pull data from SEC Edgar for the quarterly reports. And then, yeah, like I said, I need to redo feature dropping and see, what's correlated, how can I improve the model. So let me think. What would be a good place to start? Really, I should start on this universe uh, improvement block. Because if I could add all sorts of things, but those will improve the model. But it's almost certain that this universe thing is going to improve the model. So let me look at that. Look into that. Oh, I also need to add NAICS sectors. But since I think that probably should perform better than these SIC sectors, but I don't think it's gonna. outperform the model because using SIC sectors degraded the model performance so significantly. So I'm going to focus on this right now, dropping these things. Also, I was looking at Claude yesterday after the stream and looking at what are better features to use. Or not features, what are better target metrics to use. So I'm actually going to pull that up right now. That's somewhere on my computer. I just have to find where. Where is it? Here we go. Yeah. So let's see what it says. So what is that? I'm not reading through two different responses, so your model can get better. Oh, this is the wrong thing. Okay, so IC and IR are the standard workhorses. The values are reasonable. A few thoughts on each, plus what you're missing. Reasonable for daily horizons. So I actually have a 5-day horizon. This is Spearman rank correlation between predicted and realized features. An IC of 0.02 across 500 stocks is genuinely useful. Mini production quant models run at 0.03 to 0.05, but those are typically longer horizons where signal is stronger. Yeah, so that's what I'm doing. If you're predicting daily returns, 0.02 is a good starting target. One nuance, make sure you're computing this cross-sectionally. Yeah, okay. The range here is very wide, which makes it less useful as a threshold. Okay. This is your most important metric. It tells you whether IC is consistent or whether a few big days are driving the average. What's missing? Long-short spread. Yeah, I already have that. Already have this. Hit rate. What percentage of days does the long-short spread return positive? All right. Oh, so what's it say about that? This is a useful sanity check. All right. I don't really want that. Not a model quantity metric per se, but critical for feasibility. All right. I'm not paying attention to that for now. I want to improve the model. Max drawdown. That's interesting. Yeah, so I don't really need to add any other metrics. So I'm going to work on this universe improvement. So how can I add a filter to my universe which only gets tickers which are common stocks? Saying we've been through this. Yeah, I know. Tonight we're fighting in a losing war. Use the symbol table's existing flags combined with safe pattern matching. Yeah, the problem is that's unreliable. Okay, and I'm going to listen to some music. Oh, where'd my headphones go? Oh, my headphones came off. Okay, I'll go find those when I go to the bathroom or something. Alright, yeah, so filtering common stocks. Is there a list? Is there a list somewhere which shows all common stocks including those which have been dropped out of the market. Minimum hold. Well, since I'm doing 5-day future. It's basically the minimum. The hold period is whatever target I'm doing. So, right now I'm working on 5-day future returns. So I'm predicting 5-day future returns. So I'm just planning on doing uh, if I buy, hold for 5 market days, and then sell. Um, I don't know what. I guess I'll sell either at the end of the 5th market day or at the open on the 6th day. Um, but that basically, I think it would be good to do different models, like a daily model, a 5-day model, a 20-day model, and maybe like a 200-day model. And then on the portfolio manager level of the model, then incorporate all of these models and then decide how to allocate money based on the outputs of each model. That way, if there's something that has a high probability of going up for the day, I can, take that. And then if something has a high probability of going up, in 5 days, I can take that. But I can do that later. I want to get something that really works well for 5 days. The honest answer: there's no single free data source that gives you airtight security type classification for all historical US tickers. That's a paid data problem. Bloomberg, CompuStat, and FactSet charge thousands per year. But you probably don't need to solve it perfectly. Yeah, I do. Security type filter, price filter, liquidity. Your liquidity filter is doing the heavy lifting. Closed-end funds, MLPs, royalty trusts, units, rights, and warrants are almost all far less liquid than common stocks. After you take the top 500 by dollar volume, how many of these problematic types would realistically survive? After you run your full filter chain, inspect the survivors. At the very least, there should be lists for subsets of the data I want to exclude. For instance, what are those called? Synthetic tickers? Test tickers. Can't even remember what we're fighting for. Living on hope and gasoline. I got a real bad feeling it's a pipe bomb dream. Alright, so maybe I could drop out some of these. Because the problem is in my universe, let's see how I'm defining the universe. Because, data, CC Edgar, universe, no. Data, let's close that. Close data retrieval. Universe Explorer. So, this is how I'm filtering. Top 500 by liquidity. So I did this off stream. I created this universe and I tried to do the walk forward analysis, but somehow the walk forward analysis was breaking. I think because this universe somehow wasn't including a lot of data, but I'm not sure how that happened. So remove penny stocks. Get the top 500 by liquidity. And then only use those. I guess I could change the order of these. So then it's saying start by filtering out everything that's less than $5. Next, filter out everything that doesn't have 252 days of history. Finally, pick the top 500 by liquidity of the remaining stocks. So let's save that to universe 3. And maybe it will work. Maybe it will drop out everything else because it has low liquidity, but I don't really get why it wasn't working before. CD Explorers. And let's do Universe Explorer. So 3 takes all data. Do I say ETFs include? Yeah, filter ETFs is true. So no ETFs is the first thing. Next thing, drops out everything under $5 per share. Next, drop out everything with less than 1 year of data. Next, drop out everything, pull the top 500 by liquidity of remaining. Okay, now let's go to Model Explorer, and I'm going to change the universe to 3 and turn this guy off, turn on test model 12. Then we should see how does model 12 perform with the new universe. How does model 12 perform with a more constrained universe? Living on hope and gasoline. I got a real pride problem. It's a pipe bomb dream. Took it too few, too many liberties. It's a hard-ass lesson to learn. Roll the dice, one more turn. Too heavy on the pedal. So filtering for the new universe, which is universe 3. Roll the dice, one more turn. Okay, so now we have universe 3. Now we could do Model Explorer. And let me make sure I saved this. Yep, it was saved. Okay, so, oh, yep, oh. What the hell? Import advanced models. Took it too few, too many liberties. It's a hard-ass lesson to learn. Norgate? Never heard of it. Took a few too many liberties. It's a hard-ass lesson to learn. Roll the dice, one more turn. Too heavy on the pedal and you crash and burn. Oh, proprietary database. So how much does something like this cost? Maybe I should do a free 3-week trial. Generally ranging from 270 to 790. Oh, for 12 months. Okay. Monthly subscriptions are available around 25 bucks. That's not so bad. This is very helpful. The NASDAQ trader file. Oh yeah, and before I look at this, let's figure out what's the cause of this error. Because this is what I don't get. Model Explorer worked yesterday. I'm using Model 12, right? Yep. From numpy.lib.array, normalize axis index, no module found. So why is that breaking now? That shouldn't break. It was working yesterday. You have two options. Version mismatch. You recently imported SK Folio, which automatically imported its dependency, CVX-Pi. The version of CVX-Pi installed in your stock market environment is very new. I think I did that before. Oh, but yeah, universe died, 0 stocks. So what's that universe look like actually when I try to pull it up? Import pandas as PD. Universe is equal to pd.read_feather. And let's read /data/ universes /3.feather. So it has a lot. Universe. Yeah. Universe.date.unique. Oh yeah, so universe.account_symbol.unique. 1925 unique account symbol. So that should be fine. Conda deactivate. So I don't think base will help, but maybe I'll try it. And then I should get that same error. But that's all the CPCV stuff. And I wasn't even able to get that to work. So I'm actually just going to comment that out for now. Scripts, advanced model. So what if I just comment that guy out? Will it work? So let's put think it was that one, but let me make sure. So it's this guy. So let's say model 12 results on universe 1. They offer a free API that allows you to access delisted data as well. Who does? That Norgate? Norgate offers a free API? Alright, so these are the best results with universe 1. And then let's see how universe 2 does. Universe 3, I mean. Roll the dice. One more turn. Alright, so this should be about to finish. Let's see how it does. If we're using universe 3, does it perform even better? Okay, those are the results. So it's dropping out a lot of features. Oh, I think I have shadow feature reduction on. Model Explorer. Let's see here. Train model, split data, evaluate model. Oh no, I don't have it on. So it was worse. I'll try putting this in. Yeah, that looks really bad. But you can see this weird looking thing here. That's because for long periods of time it's not picking any universe. There's nothing in the universe, so it just flatlines. Alright, so this is giving me things that are publicly available. Does it? Okay, so let's pull up symbols and see what that looks like. I think it's actually a CSV. / data / read CSV. Okay. Let's look at everything in data. EODHD. Okay. Thanks. free starter. 20 API calls per day. 20 API requests. What's the difference between a call and a request? So what does that mean if I get 20 calls per day but 20 requests per minute? Roll the dice. One more turn. Too heavy on the pedal, then you crash and burn. Took a few too many liberties. Got a real bad feeling it's a pipe bomb dream. What is an API request? A request is a literal technical act of your computer sending an HTTP message. Limits like 20 requests per minute are purely for traffic control. API call is the logical execution of a service. It represents you asking the API to do the actual heavy lifting. Oh, so calls when you give it some SQL code, command or whatever. Request is you're just pulling the data. Okay, I'm not good at APIs. Could I just put this in? Oops. Don't want to share that. Okay, I'll generate a new token. Let me put this down here. Okay, so let me see if I could pull that delisted data. I lost where it was. Here we go, delisted data. Afterwards, you can find the desired ticker in the output. Okay, so let me put this guy in. Let me put my API key in. Exchange code. What does exchange code mean? Is this like NYSE? Oh, NASDAQ. Okay. So what's this look like? So we have the code, the name, the country, the exchange. So this is everything that's been delisted. That's a lot. Okay. Let me look back here really quick. Yeah, so is this actually how the Dolt Hub is organized? Common stock, bond ETF, allocation ETF. So if I go to /data, oh, it's because it's doing symbol table. I just have symbols, right? Symbols.feather. Symbols.feather. Read feather. Meta is pd.read.csv. Then do that. Then do that. And then let's just do len meta 22623 len of meta dot account symbol. So parse type meta dot parse type dot value counts. Dot head 30. So if I do meta, where are the value counts? Attribute error. Oh, it's a method. Dot sum. Oh, good. So it's the same. So let's do print that, and then print this guy, then print that guy. Okay, so it looks good. Next I should, yeah, so then let's do meta dot parsed type dot unique. What's the length of that? 13,492. Okay, so no. This will show you every security type. It seems to be working. However, there are way too many types of securities listed. Here is the output. Okay, I'm gonna go to the bathroom real quick and grab my headphones. I'll be right back. And you're getting months from names that contain dates. Instead, match against unknown keywords at the end of the name. Match against known keywords. Symbols with an S. Okay, I forgot. I need to update the changes to GitHub because I made some commits yesterday. But I didn't push them. Okay, good to go. Just two changes: the path and read feather instead of read CSV. Yeah, okay. Run this and share what comes back, especially the uncategorized remainder. Okay, I'm just going to put this in a script. So in data retrieval, we're going to do name sort test dot py. Meta.isETF. So I feel good, but I've gotten stuck. I mean, but that's basically where it's been. I when I got here, I was like, oh, I'm the man. When I first had the model that worked, I was like, I'm the man. And then I guess I was just testing it from here. And then what was it? A little over a week ago, here I was like, yep, I'm definitely the man. It's performing even better. And then here a week ago, I was like, oh no, I'm screwed. It's not working. I did that and I thought, oh, okay, it's not so bad. Basically, the problem, I think that constraint I've placed on the code where I want everything to be free is making things really hard. But that's to be expected. There's whole companies that just give stock market data. So making something that's totally free is gonna be hard. Um, so I that's kind of, if I keep hitting my head into a wall here, I haven't made the model better now for a whole week. And so if I keep hitting my head into the wall, I might start considering using a paid data source. Um, but I really want to avoid that. I want to make everything free. So, but I feel really good about it. This is kind of the nature of things. Um, I just got to keep hitting my head into the wall, and eventually a really good model will pop out. I feel like there's so many things I have that I can improve these results with, adding fundamental data, doing what I'm, getting the universe to exclude things that are going to make it worse. Um, Adding new features, trimming the features, figuring out what the hell's going on here. Um, I feel like I have so many things I can do that can improve the model. I have a path forward. I just got to keep hitting my head against the wall every day for a few hours. And someday I'm going to get a really good model to pop out. So I'd say overall I feel really good, even though I haven't made progress on improving the model for a week. Getting that sector information was quite a task. Yeah, so I feel good about it. How about your model? How do you feel on your model? Um, okay, so I'm going to say now update this code to fix these issues. All right, and here's the code. I think I'll be able to get a good model working as long as I don't get drafted by the end of the year. I'll have a good stock market model. And then if I get drafted, if they send me off to Iran, that won't be too fun. And I won't be able to work on my model. Got a real bad feeling it's a pipe bomb dream. Did a lot of things for the brave and free, then you're gonna make a law against a boy like me. Well, I don't even have that, so okay. When I die, Lord, I want you to put my soul upon a train. Send me southbound, get this cold blues man name. I've been lost on them back roads too many times. I've gone blind. Losing faith in my family had driven me out of my damn mind. I guess I'll switch back to base. At some point I'm gonna have to make my environments consistent. You've got the right idea. Thanks. My model's causal. So what does that mean, causal? Something happens and then your model causal. What is a causal model? Okay, let me see. Causal model. Oh, you're identifying the cause of what's happening. Oh. So I have a predictive model. You have a causal model. I think a causal model is more robust, right? And then if you could figure out, once you have an understanding for how the model's working, what the fuck is this? It's hiding them from me? It formatted it odd. Okay. It says pure causal model is nearly impossible. Indigeneity. What the hell? Um, it's taking a bit longer to prep it for the market, but I've learned more in even the past 2 weeks. By the way, apologies for the spat. Well, you don't have to apologize. That guy was looking for a fight, or I don't know what you would classify as he was doing, but it was like I don't know, being a know-it-all. It's kind of being a dick, I think. um, no, yeah, that's what I mean. I agree. I don't know what you said that triggered it either, but he was being a dick. Oh, you're in futures. Oh, but so then how's your causal strategy work for stocks? Is it hard? This says it's hard, nearly impossible. But I think that's because there's so many variables, right? If you simplify the thing down to a few variables that you're looking at, causal model should work. But if you're looking at everything, how do you get causes between thousands of different tickers and thousands of different, macro variables? Um, oh yeah, so if I go back to base, then fetch symbols should work. Now let's look at the symbols. So how long was symbols before? 22,623. Okay, good. It's the same. So why does it say that it's hard to do? Why'd Claude say it's hard to do a causal model on stocks? And have you experienced that, or is it you don't think that's the case? And why? I forgot what that script is. Python 3 test. Name sort test. But it's not a trading model, it's an investing model. So long term, you're buying and holding. Oh. But for, I guess, investing, do you get, why is trading more popular than investing? You get a higher turnover, so then you have a better returns. I've always assumed that's the case, that trading gives better returns than investing, but it's less stable. Higher risk. What the fuck is this song? Alright, I need to get a better song. And I'm getting old. Hollywood, I've been to Redwood. I killed an ocean for a heart of gold. $929 uncategorized. Why does it say, 929 were uncategorized? For a heart of gold. Keep me searching for a heart of gold. I am a miner for a... The risk you take in markets is directly correlated to the amount of time you spend in the markets. Trading is flipping your money. Investing will never exceed the returns. Yes. Yeah, okay, that's my intuition. You'll never make as much money from investing. However, if you're investing, you're never going to lose everything in, a short period of time. Did I save? Hmm. Classify security. Alright, why did it think that would reduce? Critical logic change. Instead of requiring common stock in the name to be kept, everything is kept by default unless it matches a removal pattern. Numbers being exactly the same with fundamentally different logic is impossible. Save. Oh no, I was changing fetch symbols around. Okay, so that should be good now. Is that Jesus? No, I'm not profitable yet. Basically, I have check out. Here's the model progress. So, a couple weeks ago, I guess when was this? Maybe 2 weeks ago, I got this model. It was working really well. I went 2 weeks ago. Yeah, 2 weeks ago, I got this model. It was working really well, so I went through and tested it every which way I could. I got this is how it was performing at the end of the test. So you could see it was outperforming every metric. I thought, oh, this is great. This is a really good model. Then I changed the training test split. Turns out that it wasn't performing that well. I did a walk forward, and basically I'm losing predictive power and stability, but the stability is still good enough to implement. The predictive power is just slightly below the threshold I'm looking for. So now I'm trying things to improve the model. And the first thing is I'm including all sorts of tickers that I actually don't want to include in my universe. So I want to see if I take them out, is this going to improve the performance of the model? Is ETF and is test issuer showing 0 removals? Two problems. Is ETF and is test issuer showing 0 removals? The columns are probably Boolean, true, false. All right. So let me go get meta from the code. All right, what else? Removal patterns are causing false positives. Look at the removed list. HTA, Healthcare Trust of America, Class A common stock is a legitimate REIT being killed by the ending trust. So it's finding trust in here and killing it. Is a legitimate ATR being killed by depository SH. These are real stocks. The fix is a two-pass approach. First, explicitly protect anything with the keep keyword. So rescued. Lotus Technology Inc. American Depository shares. So let's see, what is that? I need a good song to listen to. But it ain't came yet, so I guess I'll have to start a bank. Sitting in a tank. Time my wife talks, the baby gets mentioned. I'm so broke I can't pay attention. Lord, how it tears me up to see her cry. Well, I've been spending all my nights on the internet and looking for a clue, but I ain't found one yet. Just a bunch of Mopars, guitars, and other stuff I came by. Well, Lord, if you can hear me, won't you throw a damn dog a bone? 'Cause if the devil shows up with a better deal, this old soul's a going down.
You smell my chili?
What?
You smell my chili?
No.
Well, it's cooking.
Well, good.
Are you streaming?
Yeah.
Oh, I'm gonna do your stream.
Okay. Like figuring out which one of these banks am I gonna go rob. Well, the name of the game is hurry up and wait, but that ain't put no food on my plate or gas in my car. And I drive a Bronco. Record deal and I'd not have to worry about my next meal, but I'd still be trying to figure out. Yes, they are. I'm lucky to have good parents. That's what I have realized in recent years. And I mean, they're super supportive in every way. They, when my whole life fell apart and my girlfriend broke up with me, and then here's what happened in a stretch of 6 months last year, from end of December 24 to June of 2025. I My girlfriend of 6 years broke up with me. I never thought that would happen. I failed out of my master's program. So I was in a master's for applied math and I failed out of that. And then, like 2 weeks later, my girlfriend broke up with me. And then in May of 2025, I lost my job. So it was like my whole life fell apart. But I had my good old parents to support me. When I moved from Baltimore, my mom came and helped me move. What else happened? Oh, and now I moved back into their house. And yeah, they're always supportive of everything I want to do. My dad puts on my streams in the mornings sometime to help me get watch time and stuff. So anyway, I'm lucky. And they're good people. Hard remove pattern. Okay, so let's update that guy. Also add the ambiguous ticker cleanup. Okay, why are you hard removing tickers with a $sign? And I kind of feel like a loser moving back in with my parents at 28. But they never made me feel like a loser, so that too. And then my truck broke down, and my dad's helping me fix my truck, and he's letting me use his truck while I don't have a car. Failed out of a master's program and a girlfriend broke. Well, to be honest, it's not an excuse, but it's also like hard to concentrate. Like I had like online classes, and then I would get home from work. I'd be like, all right, time to do my online class, and then I would start doing my online class, and my girlfriend would get home, and then she'd just start an argument, and I'd be like, and then I should have just been like, all right, shut up, I gotta focus on this, but instead I was like, I gotta fight this argument. So Anyway, it's good to see. Same sequence of events besides the loss of job. And I lost my job. My boss told me, hey, you're not. She told me May 2nd. She said, oh, you won't have a job come June 1st. So I had under a month to find a new job. But it kind of worked out because she extended me for a bit. Then I went and did some work last March, and they kind of needed me to finish the data analysis. So then I got hired at my new job. So it all worked out, but I do think that has to be my low point in life is um, broke up with my girlfriend, failed out of a master's program, and then my master's program was being paid for by my work, and so, but then there's something where if you don't pass, then you have to pay for it yourself. So then all of a sudden I gained like $12,000 in debt from that. So went deep into debt, failed out of a master's program, ended my relationship, which I didn't want to happen, um, and lost my job. What a sequence. Anyway, it's funny. It is a standard, but could there be any exceptions? All right, I have to go to the bathroom really quick. I'll be right back. Drinking too much Dr. Pepper. Hey, buddy. Going in, bud?
Good boy.
Going under the covers? There we go. I break my rusty chain. I felt 100% the same way. I started devoting all my time to church activities in an attempt to find. Yeah, I mean, I never went to church. I'm too much of like a loner, lone wolf sort of guy to really get involved in any sort of group. But then, yeah, like I keep saying, I did become very religious. You develop, it's kind of like the full circle. I was raised Catholic, then decided this is stupid. I'm really smarter than all of this. And then my life didn't go well, and then you go, oh, this theology, it's really powerful. There's anyway. Um, yeah, anyway, it's funny how that works. And it made me really dislike atheists. Or I don't dislike atheists. I hate atheists who are raised atheists, and then they tell you how stupid religion is. It's like that is your religion, and you're just doing the same thing that super religious people do when they say, "Oh, you're an idiot for not believing in God" or something. It's the same thing. You're an idiot for believing in God. Well, you never believed in God for the first place. I like atheists who are raised religious, and then they change. They develop their own thing, and they go, "I became an atheist because I rejected what I was taught." But if you're an atheist because you just believe what you were taught, then you're just, that's the same thing. I can't believe they don't see that. It drives me nuts. No, but I like atheists if they're reasonable atheists. Update the whole code to include this. Give me the new script. Gonna break my rusty chain and run. So dollar tickers, get all of those. Okay, so it's writing the new version of the code. I'm gonna break my rusty chain and run. All right, let me get a Red Bull real quick. Sorry I keep leaving. This is boring, but I'll be back in 2 seconds. I'm gonna break my rusty chain and run. Okay. So let's put this in and run this guy. Ambiguous, blocked, rescued, so is the $sign list coming out at the beginning? I'm gonna break my. Not a single stock in the tire list of 888. Okay. Hey Drew, what's up? I'm doing a stream right now, so my end of the conversation will be on YouTube. I haven't booked a tea time yet. Should I do it right now or is it too late? All right. Let me see. Oh, there's no morning. Oh, that's today. Tomorrow, the earliest is 11:20 a.m. Um, I wonder if they have lights. Strawberry Farms. Just a sec. Yeah. Because it's way cheaper if we do later in the day, like 4 p.m., but I'm worried we won't be able to play a whole round. It's way cheaper. What? Why do you say that? Oh, you've been there or you've seen it or? Oh, I'm looking at a picture. They don't have lights. Well, what time is sunset? Well, that's what it was a couple weeks ago. It's probably later now. Oh, 7:09. All right. Um, how long did it take for 18? It's like 4 hours, right? Okay, just a sec. Just a sec. Um, Strawberry Farms. What's San Joaquin? I never heard of it before. You me? Oh. Um. All right, let me look it up. Rancho San Joaquin Golf Course in Irvine. Let's see. Yeah, that's way cheaper, but it's not as nice. Um, but when I looked at Strawberry Farms, it was way cheaper than it is right now. Uh, but what if we did next Saturday? Because they have a tea time at 3:30 for next Saturday at the cheaper price. 115. 115, but that's the price that I was planning on paying. But like for today, it's 185 unless we do 4 p.m. So Saturday 3:30 is good. Okay, do I book for only 2 players or more? Or is anyone else coming? Or you're asking if I think we could? Well, I don't know. I don't know if I could get. See you, sir. Night night. Um. That was my viewer left. The stream. Yeah. Well, I'm sure we could get people to play. But it's up to you. It's your birthday present. So let's do. Well, let's just get 2 for 3:30. And then if you could find someone else that wants to play, then we'll get them. All right, cool. And if we book 2 for 3:30, I'm sure we could do another. Um, we could add someone else at the same time, don't you think? Okay. I'm booking it. Um, I could ask like Henry and Ryan and stuff. Okay. I'll ask right now, and then if nobody's replied in like an hour, then I'll just book it for 2. Okay. Um, let me just send it real quick. Three thirty p.m. That'd be a good pre-Easter activity too. Yeah. $2 weeks. But then after Colorado, I have to go to Livermore for a week. So I'll just. Yeah, but I'll be back for the weekend. Uh, I'll be back. Let's see. I'm going to Colorado on the 5th, Easter night. And then I get back on the 18th. And then I have to go to Livermore on the 20th. And then I should be back on the 25th of April. Okay, I just sent it. We'll see if anyone replies. What are you doing this weekend, man? Four verts. Who won? Nice. The championship, or was it just a game? Nice, man. What's Rex play? Running back? Oh, I mixed those guys up. You want to do something this weekend? Something fun? You want to go to the Swallows parade? Yeah, I know. I'm just kidding. Hey, when's the Swallows parade this weekend? Oh, you sold them? Hey, that's not bad. You should have bought some oil last Monday. Well, hey, there's still time in oil. If you think Trump's peace deal is BS, I don't know what you think about it. But if it is BS, oil's gonna go to 150 a barrel on April 6th. Um. Anyway, what are you doing tomorrow? Making PB and J's? All right, cool. Well, I'll see you next Saturday for golf. I don't have any plans other than streaming. Okay, sounds good. Is it a UFC card or is it like a fight night? No way. Dude, that's sad. Izzy's all the way down to fight night headliner. Yeah, we should watch it, man. I'm down. All right, cool. Talk to you then. All right, later. All right, so let's see. I want to make sure that I'm not removing anything I don't want to. Yo, Drew. No. Why? What's happening then? Oh. Dude, that's genius, man. Anyway, that sounds fun. No, I won't make it though. Hey, that's my dad's birthday. Well, let me know how much it is. I might be down. When, in August, that is? September. Well, I'm hoping I'll live there by then, so I'm down. You're going to Hawaii? Oh, yeah, I forgot. Hey, that sounds fun. All right, cool. Yeah, well, let me know about the flights. I'll book the tea time if no one replies. Actually, I'll book it either way in an hour. I'll let you know once I book it. All right, talk to you later, man. Bye. Ow. Happiness. The dog days are over. Alright, I need a better song to listen to. This is actually a good sounding song. I don't even know what it is. Okay, so let's add this to hard remove. Alright, so we have ambiguous, rescued, and blocked. ETF flag, test flag, hard remove, $sign, .p, blacklist. Okay, so basically I need to test this. If it's testing well, then I'm going to do this. I think here are the results of the walk forward analysis. If I'm improving the universe by removing all of these, then I think this should improve things. Now let's look real quick. Test one must keep verifies well-known stocks. Okay, so let's put this in here. Ticker filter test. In symbols, but not in prices. ABE, AEF, ABE. Okay, so that's a fund. But what about AGNC? I'll never forget you. And I never make it mine. Is matching the company name, not a BDC designation. Come on. So you never make it mine. Okay, so it's getting removed. Preferred apartment communities. Bing ding, bing ding 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 ding, bing ding 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 ding. And we'll all float on, okay. And we'll all float on, okay. Okay. And we'll all float on anyway. Well. Alright, so let's get this to give me the new file. Moves this on the way. Bing ding 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 ding. Alright, so if you're watching and you don't know what I'm working on, let me go over it real quick. These are my goals. I want to beat the S&P 500 by a significant margin. If it's going up, if the S&P is going down, I don't want to beat it and lose money. I want to still be making money no matter what. I also want to generalize this into a usable Python tool that anyone can use to create advanced models for themselves. This is the general outline. So first you isolate stock universe from your data. Next, put it into a returns model. The returns model should work well. And so this is my current returns model. And the problem is it's not giving the predictive power it was giving at first, so that's falling off with time, and it's not good enough to implement. The stability you see here, it's still hitting my metric, but that's fallen off too, so I need to figure out how can I improve this. And right now I'm working on improving the universe data, so I want to remove everything that's not a common stock and see how it performs. Alright, already, we'll all float on, alright. Oh, I think I already have it. All right, I want to verify these. Intentional removal pattern. Okay, now this will save it. Where's it saving it? So it's not showing this. Waiting for you. Okay, so let's put the security filter class in. I don't think I did that yet. Okay, so we've got this. Now we could go to Universe Explorer and let's get a new universe. Okay, all data removes the following tickers. Removes the following stock types. Okay, so remove all of those. Now we can just say, let's do the same thing as here. But now it's going to be get universe 4. Filter is just security filter. That's what I called it, right? Security type filter. Okay, now let's pull that universe. Then we'll see, does that improve the model? Alright, I have to switch the cond environment back. Okay, good. So it's keeping a lot of stocks. We're getting about 3,000 to 4,000 tickers per month. Okay, so this is close to being done. We're in 2024. We just have to get to 25 and 26. The number of stocks went way up, but that kind of makes sense. So now let's change the universe to universe 4 and run model 12 again. And now we're going to see, does this improve performance? Oops, don't want to run that again. We want to run the Model Explorer. Okay, so now the question is, does this improve performance? You must be Daddy's little pumpkin, I can tell by the way you roll. You must be Daddy's little pumpkin, I can tell by the way you roll. Well, you know, past 11 and you're sleeping on the bedroom floor. I can see the fire burning, baby, burning right behind your eyes. I can see the fire burning, burning right behind your eyes. You must have swallowed a candle or some other kind of surprise. All right, come on, let's run. $300 in cash. So I'm expecting that this should give me a nice improvement. If it doesn't, we'll be on to the next thing. If it doesn't, I'll try this again and add the volume filter to get the top 500 by volume. Gonna rattle somebody's cage. Yeah, I'm going downtown. I'm gonna rattle somebody's cage. My guitar and strut all around the stage. See my baby coming, don't you tell her that her daddy's in jail. See my baby coming. Alright, I'm worried this is not working. Razor sweet daddy's bail. You must be daddy's little pumpkin, I can tell by the way you roll. Well, you never do nothing to save your doggone soul. Alright, so I'm going to let this run. Does it improve? If it doesn't improve, I'll try filtering out the top volatility, or top by volume, and then I'll go from there. I don't know what's taking it so long though. get. Yeah. Keep on keeping on. Yep. Well, I want to see. I finally finished the universe filter stuff, so I want to see, does this improve the model? I'm not. I'm only using the filter for filtering out the crap stocks I don't want. Um. Oh. So this is taking so long because my universe is huge now. It's getting like thousands. The recent years is getting like yeah, so that's why that's taking so long. Yeah, recent years it was getting thousands of stocks. It was getting like 6 or 7 thousand. So 5 we're gonna crop out. Oh no, text stickers. Afterwards, filters top 100 by volume. Man, get. So it's out in the liquidity filter. Maybe I'll do the top 1,000 or even, yeah, top 1,000 should be good. So we should see 1,000 for each. Can one man get? Can one man get? How lucky can one man get? Yes, I've lived a life that's full. I've traveled each and every highway. What do you think about this, Sir Night Night? I was thinking of doing a different model for each sector and then using the portfolio sector to kind of weight the different sectors based on how much they're going up. Their recent momentum. Code and shit. But I'm hood rich. Thank you very little. Unbeaten path. All right. Yes, I've lived a life that's full. Traveled each and every highway. Yes, much more than this. I did it my way. Alright, now we're computing the features. There's 1,000 each month, so I think that should go faster. Let's see how it does, though. So I did this. Only difference between you and me. Did he get his feelings hurt? Nah. Yeah. Well, what I have right now is kind of a simple strategy. The problem is that's way more complicated. So I want something that works first with a simple strategy, and then I could get into more complicated things later. Good. Now we're starting the computations. Okay, good. It's validating. Let's see. Do we get a better performance? I did it my way. Okay, so this is the last thing I'm doing today. I'm really hoping I'm going to get better performance out, but we'll see. I don't see how it wouldn't. No, it was based on all stocks. I was doing this filter, but I was taking every stock in my data set, um, and then filtering out everything with these. So this happens sequentially in order. So first and I updated this every month. Is how I'm having the universe work. So every month on the first of the month, it goes and gets the top 3,000 by volume for the previous month. Then it gets the top five, or everything that's over $5 drops out everything that's less than $5. Um, then it drops out everything that's had over a 50% crash in the past year. And then out of the remaining stocks, it's taking the bottom 1,000 by volatility, the 1,000 lowest volatility stocks. And that's what the model's training on. That was model 12. Now I'm doing the same model, all the same features and targets, but instead I'm dropping out all the stocks I didn't want. So all of this stuff, I'm only keeping common stock, ADR, and REIT. I forgot what ADR, foreign company, is listed on the U.S. stock market. So I'm keeping things that are normal stocks like Apple or Tesla and stuff. Keeping things that are foreign companies listed on the U.S. market, and keeping real estate investment trusts, and dropping out everything else. Before everything else was included. So my hope is that dropping out these bad tickers will improve the model. But we'll see. We're about to see. We're at 80% done with the hyperparameter optimization, and then the model runs really quickly after that. So let's see how it does. I really think it should improve, but I also thought the sectors should improve it, and that didn't. So, I'm not that confident here, but I'm hoping I get an improvement. $48, two more, $49, $50. Okay, here are the features. So good, like you say, the regime stuff's at the top. The performance is worse. Okay. Let's see what the decile analysis looks like. Looks like crap. But look, it did really well over the beginning of 24. Then failed here. Then did really well. Totally failed with the tariffs. Yeah, so it did okay and then did shitty. Yeah, so I have to look more into this. I was hoping that would improve the model, but it didn't. So I got to look at my other ways of improving the model. Which features are moving in sync versus those that aren't in that list? Okay, good. That's something to look at in the next round. Yeah, so this stream I basically added the filter to drop out stuff that wasn't good, and it didn't improve. So that's it for now. I'll look into that. Which features are moving in sync? Everything. I keep hoping I could improve things without improving the features, but that's not the case. It seems like I'm gonna have to look into the features, so I'll look into that next stream. Anyway, thanks for watching. Have a good rest of your day. Adios. I'll look into that. Which features are moving in sync? Everything. I keep hoping.